Welcome back. The rigged recaps are returning. Sorry we took a little bit of a break due to our seasonal effective football team blowing it in the playoffs disorder. But we're here and we're looking at the last day in January. Crazy, crazy, crazy nuke. But if you're using the rigged system, there are three things to point out here that are so important and will help you on your trading journey to get rich. First, the open. Look at this. 50% win rates, okay? They all do it. On Fridays, price loves to just rip. Every other day, the open can go up, down, blah, blah, blah. Fridays, rippy, rippy, rippy. If we move our win rate, look up here. We slide this thing all the way down, come back to the open. What do you notice? Well, there's even more bulls. You get some edge alerts, and look at that. 100%, no drawdown, nearly perfect. So first lesson here, Fridays, gotta wake up early, gotta be caffeinated, gotta be ready for the move to fly, okay? Second point, we fly up and we hit the first bull risk bear swing zone. Volume is 90%, which is relatively low. But this is the important thing. When we're in here, let's just look at bulls only for a second. As soon as we get up here, there are no more bull bombs. There are no more bullish alerts. And the way that we interpret that at Rigged AI is that Wall Street, hedge funds, whatever, people with hundreds of thousands of dollars in zero DTE option positions are not betting that this thing is going to keep going up. And that is so important because if Wall Street isn't positioning for the move, then it's possible, reasonable to expect it won't happen. Okay? Everyone else, retail's looking at this, we're going to break. We're telling you, bull risk, bear swing zone. I mean, if you just traded, you went short up here, you got it. Now, what you'll notice here in the middle, when price is chopping, we move this win rate slider back down to zero. And what do we see? The bear bombs are coming in. This isn't perfect trade. Obviously, nasty drawdown. It's late anyway. KTR, boom. So during this time frame, you're not getting any bull alerts. One bear here, one bear here. For reference, that's like $500,000 in bearish flow. And KTR, which is typically where it draws down to, crushed it. I mean, that is a 10x return in one day, buying and holding until the end, not doing anything else. Now, this kind of nuke, they came out and said tariffs, trade war, whatever. Obviously, this is rare, but at the same time, using option flow kind of can see it happen, right? They called it out. They stopped trying to bull this thing up, and then we nuked. So, first lesson, Friday, open, look at the win rate, get up, get your coffee in, boom, perfect. Second, you get to the middle session, and you get to this bear swing zone, and you're not getting any more bull bombs. Wall Street is not positioning to take this thing higher, okay? They're out. Just get ready for a nuke, especially on Fridays, So those are the first two. And then the third and final lesson is this. Turn all these things off. So Rigged is the only company in the entire world that tracks a volume by the number of option sweeps detected. And that means, really, really, really big trades, hundreds of thousands of dollars at a time. The more of those you see, all it means is that Wall Street is actively participating in the market. And that could be good, that could be bullish, that could be bearish, but it means Wall Street is trading. And when Wall Street is trading, we just want to copy trade them. We just want to follow them. We're not that smart. They are. And what you'll see in the line right here, so 1320, you're at 87%. That's that first move down, 530 to 529. So one strike. And what you'll notice is this line just spikes. When you see that green in there, that means the rate of change is like, whew. So you're going from 88% to 104 very quickly. And the third lesson here is when you see this volume spike, you want to follow the price action. This is a down move, clearly. The volume is spiking. Follow the price action. And if you're doing that, whether you're using the alerts or not, we move this win rate slider back to our 50%. We want to follow the price action, so we're at bears only. You'll notice, the bulls aren't even coming in, okay? There are no bulls here with a 49% win rate. You move it to 0, yeah, they show up. But the bears are where it's at, following the price action. So when you're following on a down move, all you're waiting for is a bounce to get short. You want to short the rips. This is incredible. Looks at the blue line, looks like it's going to fly out of it. It doesn't. You go to 525, bounce up one strike to 526, and these alerts kill it. 272% max gain, 179 buying and holding, no real drawdown, okay? And the way to think about it, the way to trade it is, I love this. 1, 2, 3, edge alerts. It's a 65%, 61% win rate. But this is late, right? You just moved down 1, 2 strikes. Get it on the swing, take it at KTR, you win the trade. 5x, if you're perfect, you're a god. 300% buying and holding until the end. When you get down this low, a little after 1530, it's like, just give up. You had your chance to make your money and get out. You missed it. You're super late. But it worked again down here because what happened? 1, almost 2.5 strikes. You're taking that anywhere in here. You're doing pretty well. But this is late, right? This is minus 2.77, almost minus 3, versus you could have had it one strike down from the blue. Always got to know where you are in reference to the blue line. The further down you go, the more risk there is. We get all the way down to this bear risk bull swing zone. Let's move this win rate down. And this is classic, right? You get 1, 2 alerts right there. As soon as you get to -4, you get 1.5 strikes up. Just like, hey, volume spiking. We want to follow the down move, but we always want to respect where we are from the blue line. This is the bear risk bull swing zone. You get a big swing out. It goes just above the reload. And if you took it there, you did pretty well. But ultimately, down here, this is late. You get a ton of, if we go to the on fire, you're getting on fire alerts, which means, hey, the queue is moving, it's moving fast, 100%, 100%, 100% happening quickly. You get that sign to tune in, and then all it takes is, hey, we're going to wait for the bounce. You take it on the bounce, boom, you win the trade, 100%. So 3 lessons, a little bit of a longer video than we wanted to do. First, Friday at the open, you got to be awake. You got to be ready to go. Because we're looking at 50% win rates, and they came out hot and heavy and just won instantly. Second, once you get 3 strikes higher, 3 strikes lower, doesn't matter. If you are not getting option alerts for the same side, so you're not getting bulls up here, that means Wall Street is not positioning for it to go higher. Probably want to be a little bit afraid. Okay? Bears came in, best returns of the day. Crazy. It's crazy what is possible trading 0 DTE. And then third, final lesson here is when you see a volume spike, you see this thing just flying, okay? We want to follow the price action, and that means on a down move, clearly a down move, we want to short the rips. On an up move, you want to buy the dips. Let's keep the momentum going. It is going to be a crazy year. The Orange Man is back.